and welcome to Startup Street. I'm Arundhati Ramnan, and with me is Shruti Mishra. These are the top headlines that we're tracking for you this evening. Shares of Nazara Tech and Delta Corp get battered after GST Council imposes 28% tax on online gaming and casinos. Delta Corp sees 1,600 crore rupees in market capitalization wiped out. Nazara Tech says the company will have to rework its strategy, but also adds that real money gaming accounts for only 5% of its business.
Capfort Ventures launches a 200 crore rupee India-focused technology fund with a plan to invest in over 40 startups over the next 2 years. The fund, which expects a final close by the end of 2023, has a green shoe option of 100 crore rupees in case of additional interest from investors.
Digital payment aggregator PayU partners with Amazon Web Services and Chirate Ventures to launch Infinity, a fintech accelerator program for early-stage Indian startups. The accelerator will offer AWS Activate credits up to $25,000.
Amazon Prime Video is producing a reality web series where Indian startups will compete to raise a unicorn funding round. The show will feature 10 grassroots entrepreneurs who will compete to secure funding from 3 prominent Indian investors.
China's major tech companies have shed more than $1 trillion in value since the government's regulatory crackdown on the sector began more than 2 years ago. According to Refinitiv data, shares of Alibaba, Tencent, Baidu and JD.com have plunged between 40 to 71%.
ByteDance will allow shares owned by US employees to vest without waiting for the company to list in the stock market, thereby letting them cash out. Reuters reported the move is aimed at appeasing employees who have been waiting for an IPO to profit from the shares they've been awarded as part of their compensation. Those are the headlines we've been tracking for you this evening. Shares of Nazara Tech and Delta Corp got battered in trade after the GST Council imposed 28% tax on online gaming and casinos. Delta Corp witnessed a 1,600 crore rupee market capitalization wipeout. And speaking to CNBC-TV18, Revenue Secretary Sanjay Malhotra clarified that GST levied on online gaming was always at 28% and that there was unanimity from the Council on the rate.
This is neither a decision of the centre nor of the states alone. It's a decision of both the states and the centre. They were all one, they were all unanimous that it has to be 28%. It is 28%. It is 28% on face value. And this is what they have reiterated. It's not a change or a departure. And as I mentioned,
no, it's 18% on platform fee.
This is what the online gaming companies have been interpreting it. And so that's why the council has said that to clear the air and to put, all debate to rest, because they have taken a certain line saying that these are actionable claims, these are games which are actionable claims, not amounting to betting, gambling, lottery, etc.
Pick up on what you just said. You said that the 18% GST on the gross gaming revenue, which is in effect at this point in time, is the interpretation of online gaming companies. Are we to understand then that these changes will apply retrospectively? So the 28% on full value will apply retrospectively?
That's why I said, that the rate has always been, to our mind, to our understanding and interpretation, also held by our ASG, is that it is 28% on the full value, on the, not the GGR, but the full or the face value, as some people call it. And so it's basically a clarification. And so this is
a very important clarification.
Yes, and so it is already having effect as of date, and so there is no question of a retrospectivity because it's already 28% on the face value, and we continue to charge that. Prospectively, this doubt no longer remains. That's the only difference.
Okay, so this will apply retrospectively because you're saying that this is already in place. This is merely a clarification that is being issued by the GST Council by way of the decision taken last night. And of course, it will apply prospectively. But you do need to bring in the amendment to the law as well. Are you hopeful of being able to bring that through in the monsoon session of Parliament?
Yeah, so two things. One, that there is a court case which we lost because of which the gaming companies are charging 18% on GGR, as you have mentioned.
Yes.
So we will be challenging that. So there is an SLP that we are planning to file in the Supreme Court. So that is one. So that takes care of the past period. Going forward, as you have mentioned, the council has decided to amend the law, and we are hopeful that we will be able to bring it and get it through in the monsoon session.
Okay, so two important headlines. One, that the government intends to challenge that order, which is why gaming companies at this point in time have felt comfortable with the idea of an 18% GST on GGR. So the government intends to challenge that. How soon do you intend to do that?
Hopefully this month.
All right, that was the Revenue Secretary giving us a sense of what went down at the GST Council's 50th meeting. The decision to levy 28% tax on the face value of the transaction or entry fees of online real money gaming will wipe out the entire industry, lead to job losses at gaming companies, potentially leading to their closure, say industry stakeholders. So is it game over? To understand the legalities ahead, joining me now is a legal expert, Abhishek Rastogi, the founder of Rastogi Chambers. Abhishek, welcome to Startup Street. Now, the council has argued that there is no distinction between game of skill and game of chance. If there is a real money involved, a GST of 28% will be levied. Abhishek, how big a development do you think this is, especially as it will mean a retrospective tax demand on gaming companies? The government earned 1,700 crore rupees from online gaming last year. The number could be 5 to 10 times higher or even more as per the centre.
With highest respect to the GST Council, this amendment to tax online gaming at 28% will have to cross the judicial review. And this is for a reason, and this is for a technical reason. If we see the rate notification of GST, it says actionable claims, and it particularly is only for 3 transactions: betting and lottery, and which does not include the online gaming in the transaction. So which means that online gaming as we speak is not included in the tariff entry, which is taxed at 28% currently. Now, I do not understand that how this change could be proposed. One, it could be proposed retrospectively. Then this amendment will have to happen with respect from a retrospective date. And if it happens retrospectively, then the challenge with respect to retrospective amendment will come through. Now, let's understand that currently only 3 items are taxed at 28%, which does not include online gaming. Now, if there is a clarification which is issued and which says that online gaming is part of betting, gambling, or lottery, which are these 3 entries, then this clarification, which means that it was always taxable. So whether it comes by way of a clarification or whether it comes by way of an insertion of online gaming in the tariff entry will have to be seen. But to me, it appears that it will be very difficult for the revenue authorities to collect the money with a retrospective date because of technical hurdle which may happen.
Abhishek,
that is one aspect. Second aspect is game of skill versus game of chance. What is happening is that this distinction has been recognized by Supreme Courts. What is game of skill? What is game of chance? As far as GST Council is concerned, they can say that we can levy tax on both the games, the game of skill and the games of chance, at a higher rate of 28%. But they cannot say that what is game of skill or what is game of chance, because GST Council can determine things which are related to GST and not with respect to interpretation of a game, whether it will be game of skill or a game of chance. That either the Supreme Court will do or the interpretation must happen with respect to those aspects.
All right.
Last but not the least, the most important is with respect to valuation. When we talk about the GST statute, the value of a service is predominantly the element of the revenue which is of the service provider. Here, face value is not the revenue of the service provider at all. It is just the margin money, which is the revenue. And hence, even if the GST Council clarifies that the tax would be on the face value of it, it will again have to cross the constitutional test. It will have to cross that how this face value is equivalent to the value of the service which is being rendered by the platform.
All right.
So I think
yeah.
those are the important aspects
Abhishek,
that have to be tested in the days ahead.
Yes, valid point made there, and you're seeking more clarifications. But the government is also saying that they are going after Gamescraft to the Supreme Court after the Karnataka High Court in May this year quashed 21,000 crore rupees GST notice against Gamescraft. Can you tell us what can happen next?
See, I think clearly this is the order of the single judge. So ideally, there are two options. The matter can go to the same court before the division bench, or the matter can also go to Supreme Court. So technically, we will have to see whether they will file an SLP before Supreme Court, or they would prefer still going to the division bench of Karnataka High Court.
Okay.
That is one. As we speak, the order is in our favor, which means that the courts have also tilted towards, the petitioners in this case. And hence, to me, I think what would be the killer would be to tax these transactions at a higher rate with retrospective effect, and that too on the entire money being paid, which is not the revenue of the online gaming platform. So I think it will be too much, which will be taxed. It will be exorbitant tax. It will kill the industry. It will be against the vision of the Prime Minister, who would want India to become the online gaming hub.
Sure. One of the big concerns, Abhishek, is that imposing GST on the contest entry amount will drive consumers towards offshore and illegal platforms that pay no taxes, resulting in loss of taxes and outflow of foreign exchange. Is this, then game over for the Indian gaming industry?
Certainly, I think it will be a big setback. I think this is not the right way. Personally, this is my view. This is not the right way because this is, in a way, would kill the industry. For various reasons. One, retrospectivity, which will certainly be challenged. Secondly, as far as the service element is concerned, the service provider can render services only up to the extent of the revenue which that service provider earns. It cannot be on the entire face value of the bet. And hence the question which comes is that even if the GST Council today decides that the entire face value of the bet will be taxable or will become the taxable base, will it deviate from the provisions of the GST provisions? So it will become unconstitutional with respect to the valuation provisions under GST. Last but not the least, again, the entry today as we speak is only with respect to 3 transactions. Online gaming is not part of that. Now, if it comes as a clarification or if it comes as an amendment can happen only prospectively.
Yes.
And last, it is the distinction between the game of skill versus the game of chance, which betting and gaming acts have provided. So GST Council, will they have powers to determine that what is game of skill and what is game of chance? Unless and until they say that we would want to tax both at par. And hence, the question which will come, the moot point which will arise is when they're taxing game of skill at 28%, which is a form of entertainment, then why multiplexes, etc., are being taxed at 18%.
Fair
another
point.
form of entertainment, which is an online gaming, is being taxed at a higher rate of 28%.
Sure. All right. Abhishek, unfortunately, we've completely run out of time, but many thanks for elaborating on the legalities that lie ahead. And thank you so much for joining us on Startup Street today.
Well, the last word on 28% GST on gaming is not yet said, but we will move on for now. The hosts of 100X Entrepreneur Podcast, now called The Neon Show, have launched a new fund of $25 million, which aims to enable B2B software as a service or SaaS startups to reach $10 million in annual revenues in less than 5 years. Now, this builds on the previous $10 million fund, which was 100X Entrepreneur, that invested in 40 startups in this space and helped them grow their revenue by up to 7 times in just 2 years of investment. So joining me now to talk about this new fund and what it aims to do is the co-founder and managing partner of Neon Fund, Siddharth Ahluwalia. Siddharth, welcome to Startup Street and thank you very much for your time with us here today. Tell us the idea behind this new fund. SaaS, of course, is the flavor of the season and so also has plenty of interest already from multiple VCs. What's your investment strategy?
So we believe in taking our companies to 10 million in annual revenues. And we have a very strong go-to-market muscle, which is sales, marketing muscles. We have partner in overseas in the US. So, making companies independent by taking them to 80 crores of annual revenue, that's a strategy. I think that is very unique because everybody's focused on the increasing the valuation of their portfolio. We don't care about that. We care about making the entrepreneur reach 10 million in annual revenues.
All right, so you're more focused on the business outcome, and I'll come to that specific point. But first, how soon are you going to be closing this 25 million fund? Any potential investors you're already in talks with?
So in the next 6 months, we'll be doing the first close by December. And you can think of in the next 6 to 8 months, we'll be doing 5 to 6 new investments. And average check would be like $1 million, which is 8 crores per company. We are interested in few companies in cybersecurity space. We are interested in companies which are vertical SaaS that cater to one specific vertical, solve niche problems. So we are focused on dev tool space. That's a key strategy that we are going to execute.
All right, and some of these companies that you will put money into be from your existing portfolio as well? Any other names you could share with us?
So you can think of, we'll be sharing names very soon enough, but we'll be doubling down also on an existing portfolio. We have a company called NoApp, which is at multi-million-dollar in annual revenues, profitable. We have companies like Astra Security, which are multi-million-dollars in annual revenue, profitable. So we'll be doubling down on our existing portfolio as well from the new fund.
I see. You claimed that the fund's portfolio companies saw up to 7 times increase in their revenue, 400% increase in valuation within 2 years of you investing in them. And this new fund you're talking about is also focused on helping startups reach $10 million in revenue in less than 5 years. How are you ensuring that you pick companies that they meet this high benchmark you've set?
So we invest in founding teams that are wholesome. So we neither invest in only tech teams nor business teams. We invest in teams which have a business co-founder and a tech co-founder, and both have demonstrated potential abilities in the past to build strong teams on sales, marketing front. So that's how we coach the teams. We help them hire talent across India and US. So we typically ensure that our portfolio companies reach 1 million annual revenue within the first year of our investment. And then we have built such a strong muscle in our portfolio and momentum that within the next 5 years, they're able to cross 10 million in annual revenues. And very sustainable. So you see our portfolios are profitable.
Yeah, Siddharth, before we let you go, I know you're focusing on revenue more than profitability when we're talking here. But what would you say to critics that say that this, this approach of growth at any cost of venture capitalists, etc., that is part of the problem why we're seeing increased instances of unethical practices, huge cash burn to acquire customers because of all this pressure on the founders. What would you say to them?
So, typically, let's talk about only SaaS, the SaaS sector, the software sector. So we haven't seen in India any failures in the software sector because you can't buy enterprise revenue by throwing money, right? Enterprise revenue has to be earned over a period of time. So in SaaS, a company growing 2x, 3x in yearly revenues might be unprofitable for some period of time, but companies have demonstrated, for example, like RateGain, which I've listed recently, even B2B companies which I've listed, like IdeaForge, they are profitable. We firmly believe that, give them 3 to 5 years to reach 80 to 100 crores in annual revenues, and they will become profitable.
All right, Siddharth, that's all the time we have. We wish you the best for this fund and look forward to speaking again soon. Thank you.
On that note, it is time for us to head into a short break. But coming up next, credit card startup Scapia has raised $9 million. We put its founder on the hot seat to know their fund utilization strategy, new offerings, and a whole lot more. Stay tuned. Hi, Anil, can you hear me?
Yeah, I can hear you.
Yeah, hi, great. So we're coming to you after the break. It should be like about 2 to 3 minutes. We're just also requesting you to keep your answers crisp because we're very tight on time today.
Sure. No worries. So we'll end on the hour at 7, I guess. Yeah.
Yeah, we end a little bit before that because breaks as well. So yeah, we have about like 5 minutes in total.
Yeah, for sure.
Okay, great. Thank you.
Thank you.
Welcome back. You're still with us on Startup Street. Scapia, the travel credit card startup launched by Flipkart's former senior vice president Anil Goteti, raised $9 million in its seed funding round. The round was led by Matrix Partners India with participation from Tanglan Venture Partners, Binny Bansal's Three State Ventures and notable angel investors like Keki Mistry. Now, the company, which was in stealth for the last year, will utilize the funds to scale operations and invest in technological capabilities. Joining us now to discuss the firm's growth plans is Anil Goteti, the founder of Scapia. Anil, thank you so much for joining us on the show today. Like I mentioned, you were in stealth mode for the last year. So you're tapping the travel market. Talk to us about what you were building.
Thanks for having me here. Look, we are targeting the millennials. There's a financial product that's lacking for the millennials who are looking for a very good credit card. And if you look at the Indian credit market, less than 5% of the Indian population has access to credit. Almost 50% of the new issuances is actually going towards millennials who are like 25 to 40-year-olds. They all have higher disposable income. Indian GDP is rising, and there is a huge opportunity for them to actually enjoy their travels, and they can do that through their daily expenses, right? So what we have launched is a co-branded credit card with our banking partner, Federal Bank, where customers can, on a daily basis, spend on the card. It's a Visa card. It's accepted globally and within India. And every transaction that they make, the transactions get converted into Scapia coins. They get 10% on every transaction, and they can convert them into flights and hotels on our app. Right. Not only do they get more affordable travel because of their daily spends, they also get fantastic travel rewards. They can travel in style. They can travel better. So they have unlimited lounge access when they spend at least 5,000 rupees on the card. And when people are abroad or shopping abroad, they get zero Forex markup. That's a huge pain point as well for customers. When we were working in stealth and talking to hundreds of customers, one of the biggest pain points we heard is, we're going and spending abroad, but we don't know what the Forex rate is. It shows up after 45 days in a statement. I don't know what I'm going to be charged. So there's a lot of worry on, whether to use the card. Right. So we've built in the capability to actually show real-time transactions when people are abroad and let them spend on it. So, so it's a card meant for travelers to have a delightful experience.
A credit card for travelers, and you're mainly targeting millennials. And you actually launched operations on around June 15th. So talk to us about the opportunity that you're going after, and how do you plan to scale your operations, and what's the kind of sign-ups you've seen for this product?
Yeah, no, it's very early days, obviously, right?
Yeah.
And we have not actually started marketing. First 3-4 weeks, we've been getting only organic and word of mouth. In fact, a lot of our customers are so delighted. They have been referring other customers, and we have not gone out to media to actually spread awareness on paid marketing. That's what the scale up is about in the next year. We're going to go out and create a lot of awareness. Like you said, there's a huge opportunity out here. India's roughly got about 80 million credit cards right now. In 2030, that number is expected to go to about 200 million, and 50% are in the target segment that we are going after. So it's about creating awareness, building the right product. We have a fantastic product out there, but we need to keep scaling and improving, and we need to be ahead of the curve, 6 months or 12 months ahead of whatever product is out there in the market, which serves some of these customers, and keep improving on it. For that, we need technology investments. So we are hiring people to make the product better and better.
Absolutely. So you're going to create awareness and like scale your operations over the next year. But any other products that we can expect soon, or is this the one product that you're going to focus on mainly?
No, I think it's important for us to focus on this product right now and scale it. No distractions on creating multiple products at this stage.
Right.
And there's a lot to do on this product as well, right? I mean, we're just scratching the surface at this point in terms of giving customers a delightful experience. And like I said, we'll keep innovating and make sure that customers get things that they're only at this point thinking about, dreaming about, but we'll put it ahead of everybody.
And like you said, Anil, it's very early days. So what's the revenue model like? How soon will we see you start making money? And any targets that you set for yourself?
Yeah. See, I mean, the revenue model is clear, right? It's a co-branded credit card. And what we have done over the last 18 months is actually build two companies in one, right? One is obviously building a co-branded credit card with our banking partner. But two, we have also built an entire travel platform within our app for customers to redeem their points and book flights and hotels. So the revenue model is clear from that perspective. There's obviously income sharing with our banking partner as we issue new cards with them and get the customers to spend on every transaction, and they spend on EMIs. So there is revenue sharing with the bank. And the second one is when customers actually redeem their coins to book travel, we make some money off flights and hotels as well. So that's the revenue model. It's early days, but we have lofty goals, big dreams. We are looking at a few million cards in the next few years. And yeah, this year is about making sure we're on that right trajectory.
Right. So a few million cards in the next few years. And we wish you all the best on this journey, Anil. Thank you so much for joining us on the show, but we're completely out of time.
Yeah, thank you so much. Thank you for having me today. Yeah.
Well, it's been a packed show, but we've run out of time, so it's going to be a wrap on this edition of Startup Street from Arundhati, Shruti and me. But stay with CNBC-TV18. More news and updates on the other side.